In today's investing session, we are turning to Rob Stein, CEO of Astor Investment Management. What are your thoughts on the economy? And are there any indications we could see a relief rally going forward now that the midterm votes have been cast?
So we analyze the economy. We aggregate a lot of economic data points and we come up with a reading. We call it the Astor Economic Index. And it's at very high levels, which suggests that stocks are positively sloped from here. So we believe that after the dust settles from the midterms, maybe later this week or mid-month, you will see the relief rally. But because the economy is still clicking along, GDP coming in at great levels, unemployment at 3.7%, ISM reports hovering around the highest they've been, 60 almost, which is expansionary territory. I think there's more room in the upside for the equity markets.
What about trade tensions or other headwinds that could hamper the economy or slow down the stock market?
Well, as we look at it and put it into the economic models, we see that it does not affect GNP as much as you would think. The impact on the overall equity markets, the companies that make up the S&P 500 or even the broader indices will minimally be impacted as the tariffs come in. It's more of the uncertainty of what's going to happen with the tariffs and the retaliation, but I can't see this escalating to a point that affects the overall economy, affects GDP, and affects employment trends.
Well, as you know, the president has been calling on the Fed to stop raising rates, and business is slowing in the housing market. Is there a correlation between rising rates and trouble in the housing sector?
Yeah, so I think the housing market slowing down has other things to do with it than just interest rates. Demographic shifts, millennials own their homes in a much different way, and also the store of your wealth in housing, I don't believe is what buyers right now are looking at. When we were buying houses, we were assuming it would appreciate by the time you paid the mortgage, it would fit very nicely in your balance sheet. I'm not so sure that's the mindset, and therefore housing and the housing market is much more focused on literally the utility that it provides, housing and shelter. As far as the headwinds from rates, I still believe that rates are below the neutral level. I take the Fed at their word that they will have at least 3 more hikes. I don't see that as being overly challenging to the economy. At these low levels, you have to look at where we go. Even when we were doubling rates from 50 basis points, I don't believe that's enough to impact cash flows or the income statements of a lot of the corporate earnings.
Rob, wonderful to have you here. We hope to have you back.
Thanks for having me. It's been a pleasure.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.